So, welcome. My name is Peter Isif, Senior Market at IronFX. Now, together we'll be going through a presentation where we're going to be mixing technical fundamental analysis. In front of your screens, you have the US dollar index for chart. All charts to be presented are to be of the same time frame unless otherwise stated. On the fundamental side, I would be noting definitely OPEC's decision for further cuts of around 1.16 million barrels per day in oil production, which tended to shake up the markets. It was characteristic that, and we see that later on, WTI prices opened with a positive gap during today's Asian session, while also the US dollar got a boost due to, I would say, worries of the market for a possible resurgence of inflationary pressures in this US economy due to the cuts of oil production decided by OPEC and a possible surge of oil prices. That could lead to another round of hawkish Fed. I would be noting though that, as you can see in our chart, the price action of the US dollar has corrected lower after the initial market reaction, which exactly provided this positive gap during today's opening, and is almost at the same levels it closed on Friday. We have to note also that there was a slight rise during Friday's session. The rise of the US dollar was despite the release of the of the core PC price index, and the rates both on a month-on-month as well as on a year-on-year level showed a slowdown of inflationary pressures, which more or less tended to ease market worries for a possible hawkish Fed, an aggressively hawkish Fed. It would be interesting to see the market reaction at the time of the release. Let's unlock this. Drilling into the minute chart, that was practically today's opening. You can see the wide gap, which was of around 32 points. Also, we note the wide drop, which was of 22 points practically at the moment of the release of the core PC price index. Yet later on, the market recovered and even opened with a positive gap, yet corrected lower once again during today's European session. Back to the forward chart, we're adjusting it. Here you go. So we had a correction. The market seems to have digested and seems that it has the worries about a possible inflationary effect of the oil production cuts seem to have subsided. It's characteristic that the US dollar index has corrected below the 102.45 resistance line once again and is near the same levels it ended on Friday. We tend to expect that most probably we may see a slight stabilization in accordance practically to the price action of the US dollar index over the past 2 or 3 days. That would be since late Wednesday, Thursday and Friday. So something or a movement between the 102.45 and the 101.55 like this could be seen. On the other hand, should the best take over, we may see the price action dropping further, breaking the S100 and 155. We definitely would need a lower true than this one, which is marking the low boundary of its past sideways movement and start aiming for the 100.65. On the other hand, should the market worries about the possible inflationary impact from OPEC's decision to cut production resurface, then we may see the US dollar index rising, breaking the 102.45, aim if not reach the 103.05. Mind you that a higher peak than this one may also allow us to start drawing an upward trend line showing the limitations of the upward movement. For the time being though, once again, main base scenario given also that the RSI indicator has approached the reading of 50 and seems to be stabilizing somewhat just above it. It's currently at 50.9. So we may see a stabilization of the US dollar index just below the 102.45 and definitely above the S100 and 155. It would be interesting if we drilled into the 1 hour chart. You can see the candlesticks initially becoming larger, yet later becoming smaller and smaller, exactly highlighting the stabilization. If we drill out to the daily chart, then we would consider practically today's jump just a bleep. Otherwise, we can see that there is a stable sideways motion over Tuesday, Wednesday, Thursday, Friday. And the price action returning back. Back to the 4-hour chart. Moving now to Euro USD. Now Euro USD has broken the upward movement of the pair. It's upward movement. I would be noting though that it has broken also a longer term upward movement, which was more obvious. Let me clear the chart. There was a longer upward trend line like this, which was also cleared as the price action has broken below it. Now there were some conflicting levels here. On the one hand, you had a double top here, 1, 2, and the neckline, which under normal circumstances should push the price action definitely below the 1.0760, possibly starting to aim for the 1.0525, which was the beginning of the M formation. But that didn't happen. For the time being, we see that Euro USD has hit a ceiling once again at the 1.0925, corrected lower, and seems to be about in a process of stabilization despite a strong rise during today's European session. The RSI indicator has reached and seems to be leveling at the reading of 50. It's actually at 50.2 right now. So that tends to imply a rather indecisive market, which could allow for the sideways motion to be maintained between the S1 1.0760 and the R1 1.0925. So the big picture, I think, would be showing us that given that the upward trend line has been broken, we may expect a stabilization for now before the pair actually decides on the direction of its next leg. Now Europeans, or to be more exact, Euro USD was hit on a fundamental level by a double whammy. We had on Friday the release of Eurozone's preliminary HICP rates. They were from March. They showed a considerable slowdown, at least on a year-on-year level, which tended to increase speculation among euro traders for possible easing of ECB's hawkishness, and some even speculated that the bank may now remain on hold in its next meeting, which tended to weaken the European currency, at least on Friday. The effect was amplified practically on today's Asian session with the safe haven flows enjoyed by the US dollar due to the production cuts decided by OPEC. So that tended to push the pair even lower. Yet exactly the fact that calmer thoughts have started to prevail, and more or less the US dollar has suffered some slight safe haven outflows during today's European session, allowed the pair to stabilize and did not push it lower. Should it has broken the S1 1.0760 and started to aim for the 1.0525, that would be, in our opinion, a clear-cut bearish scenario that did not happen for now. So for the time being, we tend to maintain our bias for the sideways motion to be maintained between the R1 and the S1. Also, some of you guys tended to highlight and note that whether the fact that the Swiss Attorney General, the Swiss authorities, are going to be probing the UBS Credit Suisse deal is an issue. I would say that it may be an issue. The probabilities of overturning such a deal are, in our opinion, low. The deal as such is too big to fail, at least for the Swiss economy. On the other hand, though, exactly because it's too big to fail and there is a contagion risk, that would imply that risks are high. So we should keep an eye on the issue. But for the time being, we do not see the case for the deal as such to be rejected, and God knows what then. Now, we have mentioned our expectation is for the sideways motion. Note that in case of a bearish outlook, we would require the pair to drop once again, clearly break the 1.0760, which practically rests here, 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 and here, and here. So it was primarily a former resistance line which has been broken, given that the price action is above it, has turned now into support line. So for a bearish outlook, the first prerequisite and the first signal of a changing sideways trend would be a breaking of the S1 1.0760, and then we may see the price action starting to aim for the 1.0525 support level. On the other hand, should the bulls take over, we would require the pair to break the 1.0925, which, mind you, that the 1.0925 has provided resistance here, here, and here. It's a well-tested level as a resistance line. But should it be broken, then we see the gates being paved for the 1.1125, a level which practically, let's have a look where it rests. On this peak here, and this, and this, and this. So it was tested a number of times. On the other hand, some may argue that there is a mid-level right here. Could be, in our opinion, I think it's going to go straight through towards the R2 1.1125. It's far more valid. The only issue with the validity of the R2 is that actually the peaks at which it rests upon, are pretty old. That's an issue. Okay, let's have a look now for cable. Cable in a similar fashion, yet with far low volatility. Let's shift this to the right. Was on the rise, even tried to aim for the 1.2435. It didn't quite reach it, and then corrected lower, breaking the upward trend line, guiding it. Yet seems to have hit the floor just before hitting on the S1 1.2265 and corrected even a bit higher. We tend to maintain a sideways bias for cable as well, given also that the RSI indicator has reached the reading of 50 and seems about to flatten out. It has just happened practically. And we're going to have to wait and see how the market reacts further. For the time being, though, and until the pair decides on the new direction, we expect a sideways motion to be maintained between the R1 1.2435 and the S1 1.2265. It should be noted that on a fundamental level, we had the release of the final GDP rates for Q4 of the United Kingdom, and the rates were actually better than expected. And that was a positive for the pound, in our opinion. It was definitely, it may have provided little market reaction at the release, but on a macro scale level, the improvement is important, even despite it being quite feeble. It's, I think, 0.6% year on year. But still, it's important the fact that it accelerated even slightly and refused to actually drop even further or even into the negatives. It would be interesting to see what market reaction there was at the time of the release of the UK GDP rates. Allow me. It was at 9:30. Very little reaction of only 8 peeps. Practically, the release passed unnoticed market-wise. But on macro level, in our opinion, that's important. Anyways, now as we have mentioned, our base scenario here is that the pair is to remain in a sideways motion between the 1.2435 resistance line and the 1.2265 support line. On the other hand, should the bears take over, once again we may see the price action reversing direction, breaking the S1 1.2265, a level which was aimed for here, tested here and here, and start aiming for the S2 1.2105. Should the bulls take over, we may see the price action slowly but steadily rising, breaking the R1 1.2435 resistance line, and start aiming for the R2 1.2590. Please allow me to have a second look where exactly the R2 is resting, on which peaks or shows. Okay, that's a good one. We have multiple touches. 1, 2, 3, 4. So that's a pretty sound level. It would be interesting to see when the last time it was that it had saw any price action. That was on the 7th of June last year. Yep. So practically we're talking about a 10-month high. Should it be reached, if the price action reaches up until the R2, which may slow down a little bit the bulls here. On the other hand, note how beautifully the pair bounced on the low Bollinger Band even before reaching this one slightly and corrected upwards. Once again, for the time being, we tend to maintain a bias for a sideways motion between the R1 and the S1. Moving now to USD JPY. Very, very interesting chart in the sense that USD JPY actually failed to show any substantial market reaction. It remains in a rather tight range-bound movement, and that since early Friday. Yep, since the beginning of Friday's Asian session. Just above the 132.55. For the time being, we tend to maintain a bias for the sideways motion to continue between the 132.55 and the 135. Actually, we may be discussing here that there is a mid-level at the current level of the price action just above it at 133.55. It's a very, very interesting level. Sorry, 133.55. So we may see for the time being the price action of USD JPY maintaining a tight range-bound movement. I would be noting the RSI indicator, which has flattened out but is at relatively high levels. It's currently at 61.5, which may be providing the drive for the bulls to push the price action higher. Note how this is an interesting element. We could not be able to match an upward motion. So practically that would enhance the possibility of a sideways movement. But on the other hand, note how the Bollinger Bands, actually the median, has risen, reflecting exactly this rise here. On the other hand, note also how the Bollinger Bands, the upper and the lower Bollinger Bands, have narrowed, implying a reduction of volatility for the pair, which may allow exactly the sideways motion to be maintained. Moving to the other safe haven pair, currency pair, that would be USD-CHF. Okay, we have an interesting chart, and definitely the price action has shown us that new support and resistance lines have to be drawn here, at least for the S1 and the R1. And the R3. These touches here are not by accident. There is a support line here. It was tested also here. On the other hand, we should not neglect also this level. Okay, let's discuss and let's have a look where the S2 is finding a footing. It's here. 20. And there's 3 just below it. Nice sideways motion, exactly verifying the S2 and the S3. Okay, let's readjust. Pretty wide levels. Zero point 0.9115 for the S1. 0.9220 for the R1. 0.9430 for the R3. Sorry, 45. No, 30. Ninety-four 38. 93.35. So for the time being, let's discuss direction here. We see a stabilization of USD-CHF, which is being supported practically by two elements. The first element, three elements. I would be noting the first element would be definitely the breaking of the downward trend line, which has been guiding the pair from around the 16th of March up until the breaking here, which was on the 28th of March last Thursday. And since then, the pair has been able to stabilize somewhat. The second element which supports the idea of a sideways movement would be the fact that the price action was unable to clearly break the 0.9115. So practically it's like hitting a floor here. And it was once, twice, three times. On the other hand, it was not able to break above the R1 0.9220 despite being aimed for here, tested, it's still valid. And the third element would be the fact that the RSI indicator has risen, corrected lower, and seems to be at the reading of 50 and revolving around it. So that tends to imply some stabilization as well. And we tend to maintain the bias for a sideways motion between the R1 0.9220 and the S1 0.9115 to be maintained. On the other hand, should the bulls take over for any given reason, we would require for a bullish outlook definitely a higher peak than this one. So practically USD-CHF will have to break above the R1 and start aiming for the R2 0.9335. A level which provides resistance here was aimed for here. On the flip side, should the bears take over, we would require for bearish outlook a clear break of the S1 0.9115, as it would be signaling practically an exit to the downwards of the sideways motion, it would be a signal of the ending of the sideways bias. Why? Because you would be having a lower trough than these ones. So the pair would be aiming for lower levels, allowing also for a downward trend line to start to be drawing. And we may see it start aiming for the 0.9020. Now, I know this distance here seems to be a lot. It's actually not. You can see that we had similar intense downward movements in the past, or even here, while to the upside we had the respective upward movements. So it's not something which should take us by surprise. Moving now to commodity currency AUD/USD. In a tight range bound movement, no big surprises here. Now we have the fundamentals. RBA's interest rate decision is due out tomorrow. The bank is expected to hike rates, to remain on hold at 3.6%, which is also supported by AUD/ORS with a probability of around 87%. It should be noted that should the bank remain on hold as expected, that would be a break after 10 consecutive rate hikes. So that would be a surprise. I would also be mentioning here that should the bank actually remain on hold as expected, the next point of attention, in my opinion, would be Governor Lowe's accompanying statement and any forward guidance included. Should Governor Lowe actually start signaling that the bank is going to be pausing, I wouldn't say ending, but at least pausing its rate hikes for a longer period, that, in my opinion, could have a bearish effect on the Aussie. On the other hand, we have to note here that the market has already priced in such a scenario. Practically, the market has already priced in that the bank will remain on hold tomorrow during the Asian session and remain at the same level. I wouldn't say up until the end of the year, but up until Q3. Afterwards, it may start cutting rates. That's the market's expectation. So practically a signal by Governor Lowe that the bank is about to end its rate hiking path, that would be, in our opinion, a confirmation of the market's rather dovish expectations, or at least a partial confirmation, and could weaken the Aussie. In such a case, we may see the Aussie dropping, breaking the 0.6625, and start aiming for 0.6520. On the other hand, though, we have to note here that the market seems to have already priced in such a scenario, at least according to AUD/ORS. So even the prospect of the bank pausing or ending its rate hiking path may not be much of a surprise for Aussie traders and may allow the price action to remain in the sideways motion between the R1 0.6755, see how it was tested here and here, and the 0.6625 here and aimed for here. So that would be a continuance of the current direction. On the other hand, should for any given reason the Aussie come under buying pressure or buying interest, we may see its price against the US dollar rising, breaking the R1 0.6755 and start aiming for 0.6855 resistance level. I would be noting here that the RSI indicator, albeit being on the rise a little bit and jumping just above the reading of 50, it's currently at 56.6, which may imply some bullish tendencies. It remains unconvincing. For a bearish outlook, we would require a clear-cut breaking of the R1 0.6755, so we have a higher peak than this one, and for the pair to start aiming for the 0.6855. It's a very, very interesting chart if one knows how to trade in sideways motion. Let's have a look at USD CAD, the other commodity currency pair. And ladies and gents, we have a clear bearish movement here. It's interesting how it has broken below the 1.3520, and definitely this has to be now switched into a resistance line. Now this is an interesting show here, but I would prefer this one. It could go even lower, but I think that's going to be the next support line somewhere here. Interestingly enough, this was also tested here to the upside. I'm keeping this. And that will be in green, the new ultimate support line, which is being set at 1.3095. Yep. Backing it in, readjusting the chart. Let's reposition the labels. Overall, as a fundamental comment, give me a sec. Let's first finish off with the support and resistance line. The new R3, which is now being placed at 1.3805. The R2, which is being placed at 1.3665. The R1, which is being placed at 1.3520. The S1, which is being placed at 1.3525. Sorry, 3365. The S2 at 1.3230. And the S1 at 1.3095. Let me check that. Yep, 1.3095, correct. Locking everything in. Now let's discuss fundamentals here. On the one hand, it seems like the strengthening of oil prices tended to provide some support for the CAD and drive USD CAD lower. I would be noting here that we had also some positive sentiment for the CAD as such. We would be noting also the release of the manufacturing PMI figure for March of Canada. It's going to be an interesting read to see how economic activity has evolved. For the time being, though, on a technical basis, we maintain our bearish outlook, and that's being based primarily on three elements. The first element is definitely the downtrend line. Now, you may be readjusting it somewhat. This would be coming and going, that's not an issue. The main element is that we have a clear downward slope. Maybe even a little bit lower. There were, however, also some ideas that the price action actually started here and something like this. It's another idea, yeah. I stick to the original one and expect that the price action has started to fall from here and is resting here. So first element supporting a downward motion is the downward trend line, and as long as the price action remains below the downward trend line, we tend to maintain our bearish outlook. On the flip side, though, have note that the trows which have started to form are closer to each other, which may imply that the bears are losing on strength. Also, the RSI indicator, also the lower Bollinger Band, the price action is on the lower Bollinger Band, which may also slow down the bears and may provide some opportunities for stabilization. On the other hand, though, the RSI indicator remains close to the reading of 30. It's actually right now at 31.2, also implying a rather bearish sentiment on behalf of the market. That was the second element. The third element would be the fact that the price action was able to clearly break below the reading of 1.3520, which has now been turned into a resistance line, despite providing some support here. So that has been broken. And the last element, which would be supporting the idea of a bearish outlook, would be the fact that we have the 20 moving average of the Bollinger Bands in blue, the 50 moving average, which has crossed the 100 moving average, but all three of them are pointing downwards, also implying a bearish trend. Should the pair stabilize for any given reason, I would expect it to rise, break the downward trend line. It remains a little bit questionable if it will be able to also break the R1 1.3520. I wouldn't exclude that scenario though. The main element here though of a possible switch to a sideways motion would be initially the breaking of the downward trend line and the price action of USD CAD to remain near or just below the R1 1.3520. For a bullish outlook, I would expect the price action to rise, break the downward trend line once again in a signal that the downward movement was interrupted, break clearly also the R1 1.3520. I would require a higher peak than this one, and the price action starts aiming for the R2 1.3665, allowing us also to start drawing an upward trend line. Okay, let's have a look also at oil's price. There was lots of commotion here. Now, oil's price, okay, we definitely need to make some corrections here. Let's reset resistance support lines. So I'm practically setting the resistance line. The first resistance line, you can see this peaks here and even further back, and here that was the latest one, and it was even tested here. That would be the 80.9 resistance line. It's also tested here. The second resistance line goes further back, and it's practically resting on these peaks here, but also there was some truth in another peak here. So that would be the 86.75, and the final resistance line is now being placed at 92.70, resting on this peak here. Locking it in. Let's have a look also at the support lines. The first support line is a former resistance line at this level, and that would be the 74.35. Second support line, also former resistance line, based here at 69.80. And the final support line, placing it on this shoe here, 64.25. Let's reposition also the labels. And also let's have a look at the support lines. For the time being, we tend to maintain a bullish outlook, given that the RSI indicator is still clearly above the reading of 70. However, that may be also implying the possibility of a correction lower for the commodity's price. Yet to ease our bullish worries, we would require the price action to considerably correct lower, which it didn't. There was a slight correction, but the bullish tendency seemed to remain. So for the time being, we need more price action to be able to have a clear guidance. Once again, though, the bullish sentiment seems to remain present, and the 80.90 seems to be in immediate danger. Should that be broken, that would reaffirm our bullish tendencies, and we may see the commodity's price edging higher, aiming for the R2 86.75. So that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process, and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.
Okay, so today we're going to be talking about advanced RSI trading strategies. So as I mentioned earlier, I'll just be covering for Desmond for today's webinar because he isn't well today. So first things first. So I'm Melanie. I will be your speaker for today. Here's our agenda for today. Firstly, we're going to go through briefly stochastic oscillator followed by RSI indicator because RSI as well as stochastic are pretty similar in nature. So we're going to be comparing them throughout the webinar. After that, we're going to be talking about stochastic versus the RSI indicator. We're going to be seeing the different circumstances in which you use the different indicators. After that, we're going to be looking at using divergences in trading, as well as the different types of divergence that you can look out for. And lastly, we're going to be combining them together for high probability setups. And if we have time at the end of our webinar, I'll also pull out TradingView as well, and then we'll look at some live charts together and make use of RSI as well as stochastic to look for divergences or any breakouts. So throughout the webinar, if you guys have any questions, feel free to let me know in the chat or in the Q&A section. It should be working, but I will be monitoring that pretty closely. Okay, let's get started. Hi Dahiru, welcome to today's webinar. Okay, so let's start with what exactly is the RSI. So RSI stands for Relative Strength Index. and it's used to measure the strength of a security's price action over a specific period of time. So it's also commonly used to identify potential entry and exit points in the market. So we'll be going through that in a couple more slides. So the RSI indicator measures the magnitude of a security's recent price changes to determine whether it's overbought or oversold. Oh, I'm also curious to know whether you guys use RSI or stochastic yourselves when you're trading, because it's a pretty common indicator that we like to use as well. So just curious to know how many of you guys use this daily or frequently for your trading. Okay, so how exactly do you use the RSI indicator? So it oscillates between 0 and 100. So it has values above 70, which are considered overbought, and the values below 30 are considered oversold. So why is it overbought? It's because when the RSI value is above 70, it suggests that the security is overvalued due for a price correction. So it's potentially indicating a sell signal. But when the RSI value is below 30, it suggests that the security may be undervalued and due for a price rebound, potentially indicating a buy signal. So traders often use RSI in combination with other technical analysis, as well as fundamental analysis. And I'll show you how we do that later on when we move on to TradingView. But it should be noted that typically RSI as well as stochastic are not used on their own. Okay, so let's move on to stochastic. Okay, my image is covering a little bit of the words, so sorry about that. But okay, I'm just gonna briefly go through as well, because you don't exactly need to know how it's calculated if you're using TradingView or MT4, because if you just select the indicator, it's already calculated for you. But this is just FYI. So the stochastic oscillator consists of two lines that fluctuate between 0 and 100. First line is called the K%, which represents the closing price of the instrument in relation to the high and low prices of a given period. So the second line is called the D, or percentage D, and it's the moving average of the previous line that we mentioned over a certain number of periods. Okay, so how do you use the stochastic oscillator? We'll just briefly go through this. So traders use stochastic oscillator to identify potential buy and sell signals as well. So when the percentage K crosses above the D line, it's considered a buy signal. And when the K crosses below the D, it's considered a sell signal. So they also look for divergences, which we'll be looking at in a couple more slides. Okay, so now let's look at the differences between stochastic versus RSI. So the reason why we are talking about stochastic as well as RSI, even though this webinar is for RSIs, is because they are both price momentum oscillators and they're widely used in tandem. So they each have different underlying theories, but the underlying method is about the same because it's based on price momentum. So the stochastic oscillator is predicted on the assumption that closing prices should move in the same direction as the current trend. So that's for stochastic oscillator. And meanwhile, for RSI, it tracks the overbought and oversold levels by measuring the velocity of price movements. So in other words, the RSI was designed to measure the speed of price movements, while the stochastic oscillator formula works best in consistent trading ranges. So you can see in my last point, I mentioned that the RSI is more useful during trending markets, whereas the stochastics is more useful in sideways or range-bound markets. Okay, so here's just a brief image to show you the RSI and the stochastic when used in tandem. Okay, so here let's talk about hidden support and resistance. So if you've been trading for a while, you will know that support and resistance levels are really important because they could be your exit and entry levels, as well as specific strong levels of confluence to take note of that could represent a reversal or a price breakout. So over here, we have, you can see price. We have a price chart, and then we have a stochastics chart. So if you see here, the red dotted line is what we call the hidden resistance, because between each of these levels, there is a difference in the swing highs. So over here in the first column, you can see price made a higher high, whereas on our stochastics, the swing high remained at the same level. So it's a horizontal line here at the 93.52 level. Similarly, on our second level, price made a higher high. However, on our stochastic, it shows the same level. So this is what we call a hidden resistance. So here we have another example, but in this case, we have a hidden support. So the green line at the bottom of our stochastics chart is our hidden support level at the 4.2675 level. If we take a look at our price chart, at the exact same time, price is moving in an ascending trend line. How do you know it's a valid ascending trend line? Is when you have 3 significant points touching your ascending trend line. So you can see this is what we call a hidden support because the swing lows are all lining up in the same line at the 4.2675 level. This also helps us to identify the take profit, buy entry, as well as stop loss levels. Okay, let's move on. So you can see over here, okay, let me just briefly go back to the previous slide. Here we're expecting price to continue to rise from our entry to our take profit. Why? Because here on our stochastic, price is moving on a hidden support level. Even though price on our price chart is moving in an ascending manner. So you can see here, this is what happened after a couple of hours. So you see price continued to move not within the ascending trend line, but it continued up towards our take profit as we expected. Okay. So now let's move on to divergence in trading. So previously, in the previous few slides, we talked about hidden support and resistance. Now we're going to be talking about divergence. So they're both pretty important concepts to understand for RSI and stochastic oscillators. Okay, so for divergence in trading, it's a concept that compares the movement of a security's price and an indicator such as an oscillator to identify potential trend changes. So there are two main types of divergences. We have the bullish divergence as well as the bearish divergence. So the bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. Don't worry if you're a bit confused now. We'll be showing you a couple of examples in the next few slides. So this suggests that the downward momentum of the security is losing strength and a potential upward trend may emerge. Meanwhile, for bearish divergence, it occurs when the security's price makes a higher high, while the indicator makes a lower high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So if you take a look at the image that I've included here, we have the regular divergence, hidden divergence, and exaggerated divergence. But for now, let's just take a look at the regular divergence. What we mean by price made a higher high is when the second swing high is higher than our first swing high. That's basically it. Whereas on our RSI, on our stochastic indicator, it shows that price made a lower high. Similarly, if we have a bullish divergence, price made a lower low on our price, whereas price made a high low on our stochastic chart. Okay. Any questions so far? Let me just check. Okay, no questions. Let's move on. So we have our first example of a bearish divergence. So here if we take a look at our price chart first, you can see that we have a resistance, right? A horizontal swing high resistance with two swing highs at the 0.78145 level. Okay, but if we take a look at our RSI, we can see on this red dotted line, it's actually not horizontal and it's a descending line. So with price testing a key horizontal resistance level, which is this red dotted line on our price chart, we see a smaller high resulting in bearish divergence with RSI because our descending resistance line on the RSI caught the past two reversals correctly, which is the two swing highs. So it forecasts that we could be seeing a reversal over here from this point over here on the 29th of April. Okay, so this is how price eventually played out. We can see because of the previous two swing highs and the reversals from this level, we can see we predicted how RSI reversed very strongly off of the same level. And as a result, on our price chart as well, it also reversed off the same level at the same time. In this case, this is a good example because we have, firstly, as I mentioned earlier, we have multiple swing high resistance. We also have our RSI resistance, which is the bottom dotted red line. And then we also have bearish divergence on our RSI. So you want to get this kind of confluence, which confirms your analysis so that your analysis is more accurate. Okay. Okay, let's move on to our next example. So for this example, we have a bearish divergence. If you take a look at the points that I've marked out, from here to here on our price chart, we have price making a higher high. However, on our stochastic chart, on the same time zone, or rather on the same time frame, price made a lower high. So this is a bearish divergence, and we're expecting price from this level on the 19th of August. After this, we're expecting price to drop, which you can see it did drop. Okay. So now let's take a look at repeated patterns. So here we have from the previous slide, this price making a lower high on our stochastic chart. But if you see later on, a couple days later, price again made a lower high. But on our price chart, you can see this sharp increase in price and price made a higher high. So these two levels over here makes or rather a multiple swing high, you could call that on our stochastic chart, making it a hidden resistance level. So after that, since we have this hidden resistance level, we're expecting price to continue to drop since we have a bearish divergence. So bearish divergence means we expect it to drop, and if we take a look here on this slide, price did continue to drop. Okay. So let's move on to divergence potential. So we always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. So if we take a look at our price chart, this is what we're talking about, this yellow highlighted area. But if you take a look, we also have a bearish divergence, and this is noted out by the purple lines. On our price chart, price made a higher low, a higher high, and on our RSI, price made a lower high. So in this case, since it's a bearish divergence, we are expecting price to drop. And drop to where? We're expecting price to drop to this yellow area because that's where our bearish divergence started. So we drew out this vertical dotted line so that it's easier for you guys to see within that same time frame the difference in the shape of the chart that you can look out for when you're identifying bullish or bearish divergences. So here's our divergence potential playing out. You can see price reversed to exactly where the divergence started to occur at the yellow highlighted area. Let me know if you guys have any questions so far. If not, we can move on. So now we're moving on to forecasting breakouts. Here you can see price on our price chart is moving in an ascending trend line. And on our RSI, it's also moving in an ascending trend line. But if we take a look between these two columns that we've highlighted, the RSI broke the ascending support line before price did. So this forecast that price might break out of that same support line. So point 2, price is barely breaking out of the ascending support line but shows strong recent bearish divergence versus RSI. So this is a very important point to take note of because at our yellow highlighted point, right at the start of the time period that we're looking at, you can see price broke out of this support line. However, on our price chart, it didn't. So we're expecting price to do the same as well. But how do we know this is going to happen? Just from bearish divergence alone, it might not be enough to confirm this breakout. Which is why I mentioned earlier, the confluence is so important in ensuring your analysis is accurate. So point 3, we have RSI breakout as well as the bearish divergence and price breaking out, just a little small bit on the 30th of April. So with all of these confluence, we can then say that our analysis has a higher probability of occurring. So you can see price broke out and dropped strongly, exactly as how we predicted. Sumit asked if it's possible to get a live example in TradingView with gold, Euro USD. Yeah. So after I'm done with my slides, we will move on to TradingView and I'll show you guys how we can make use of RSI and stochastic on, maybe we'll use those two charts first. Okay, let's move on to the next example. So once again, this is another example of a price breakout. So if you take a look here, price is continuing in a descending trend line, or rather not in a descending trend line, but rather a descending manner. And on our RSI, it's also descending in the same manner. However, if we take a look at the RSI chart, you can see it's briefly breaking out a small bit out of our descending resistance. So the reason why I wouldn't call this a descending trend line is because it doesn't have 3 valid points. So that's why we call it a descending resistance instead. So this is a couple days later. From this point, you see a bullish divergence. Price on our price chart is making a lower low, whereas on our RSI, price is making a higher low. So first point, price is now testing the descending resistance line and we're wondering if it will break it. Point 2, descending line breakout. As I mentioned earlier, on our RSI chart, price recently broke out of the descending line. And number 3, recent bullish divergence suggests that we could be seeing a strong reversal. So once you have all of these points that line up nicely, then you have confluence that your analysis is pretty accurate. And true enough, this is exactly how it broke out of our descending resistance line as we forecasted in our RSI. Okay. So now let's take a look at a live, or rather a GIF of bullish divergence. So if we take a look at just the image first, you can see the red dotted line that I've indicated over here has made a lower low. Price is also moving within a descending trend channel. But on our stochastic chart, price has made a higher low. So this is a bullish divergence, and I'm expecting price to continue to move upwards after this second vertical line. So if we take a look at the GIF that I've created, you can see that's exactly what happened after this divergence. Price continued to move up. But what I really wanted to highlight over here is the confluence. So if you take a look here, we have a resistance line, over here at the 1.56099 level at the swing high. And I also have a Fibonacci projection, starting point here and middle point here and ending point here. And this is my 100% Fibonacci projection. So this lines up nicely with my 1.56099 level. So this creates confluence that it's a pretty strong level, and I'm expecting price, even though to continue up, I'm expecting price to reverse off of this level. And if we take a look at our GIF, you can see price tested the level many times after it broke out of our descending trend channel. Just give you some time to take a look at the GIF. Notice how it tests this level many times. And it tests this level so many times because of the strong resistance from the swing high as well as the Fibonacci projection. Okay, so let's look at bullish divergence now. Here, I'm also making use of the Ichimoku cloud. As I mentioned earlier, we typically wouldn't use RSI or stochastic indicators on their own. We'll use them in conjunction with another indicator, as well as different graphical analysis as well. So over here, you see between the two lines that I've highlighted, price has made a slightly lower low, and on our stochastic, price has made a higher low. So I'm expecting price to continue to rise. And if you look at the GIF, that's exactly what it did as well. Okay. Okay, that's it for my slides. Let me just stop sharing so that I can pull out my trading view, and then we can take a look at some charts together. Okay, so Sumit mentioned gold. So let's go ahead and start our analysis with gold. Okay, let me share my screen. Okay. So here we have our gold chart. Before we start analyzing, a good habit would be to look at larger or longer time frames of gold. So let's take a look at the monthly time frame. So this is just to get a idea of where prices are heading to, or where prices were in the recent past. So this is our monthly. This is our weekly. You can see price is testing this area over here. Okay. And we only really start analyzing on our daily, 4-hour, or 1-hour chart. We don't really analyze on the 1 minute to 30 minute because there tends to be too much noise on those charts. Sorry about that. So we typically just use hourly, 4-hour, or daily time frame. So how do we decide which to use? So we typically just take a look between the 3 charts, and then we see which chart has the clearest price movement. So here you can see my 1-hour chart. The price movement isn't very clear. Oops. Compared to our daily as well as our 4-hour time frame. I think I'm gonna stick with daily time frame because you can see the clear movement in price up and down. Okay, I think we can all agree that prices are moving upwards and you want to follow the general trend of the chart. So let's see if we have so before we begin with our RSI indicators or stochastic indicators, we're going to start by graphical analysis. Let's see if we have any parallel channels or any trend lines. Okay. So we don't have any of those, but we know that price is moving upwards. So now that we have the general direction of where price is heading towards, let's go ahead and look for support and resistance levels. So your first support would be the nearest swing low to where price currently is. So price is currently at 1966. So my first swing low, or rather my first support, would be the nearest swing low to where price currently is, which is over here. So a good habit to have would be to pull back our support level as far as we can without cutting too many bodies of candlesticks. Okay, so like 1 or 2 is fine, but yeah, so 1 or 2 is fine. Sorry about that. So 1 or 2 is fine, but not too many. So the reason for doing this is so that we can see how many times price has tested this level in the past. And that also tells us how significant this support or resistance level is. Okay, so here's our first support level. Now let's pick out our first resistance level. So your first resistance level, similar to first support, would be where the swing high where that's closest to where price currently is. Okay? All right. So if we're looking for an entry position, we will look for maybe over here, closer to where current price is. At this swing high resistance here. Okay, so now that we have our support and resistance levels settled, let's go ahead and look for some Fibonacci levels as well. Okay, I can see at this level or this area, we have the 78% Fibonacci projection lining up nicely with my first resistance. So we also have kind of an intermediate resistance level here. So I'm just going to use a dotted line to take note of that. And this is also lining up with my 61.8. So we want to take note of these levels because price, we're expecting price to go upwards. So price is likely to, sorry, I got okay, sure. So we're expecting price to move up. That's why we're going in for a buy, right? But since we have Fibonacci levels that are lining up nicely with our resistance levels, this could mean a confluence area, and price could reverse off of these levels. So if you're heading for a buy towards the first resistance, we will wait for the price to first break out of this level here, this confluence area here, 61.8, as well as this intermediate resistance, before going in further to go for buy towards our first resistance. Okay, so now that we have our Fibonacci levels as well as the resistance and support, we can go in and look for our indicators. Okay, so here is our RSI chart. So when you have your RSI, the first thing we're going to look out for would be the general direction of price. So here I have an ascending trend line for my RSI. Okay. Next, we're going to look for divergences or hidden support and resistances. Okay. Okay, I hope this is better. Otherwise, I can close it as well. Okay, let me know if this is better. Okay, I'm gonna get rid of my 100. So for Fibonacci projection, let me just recap. We use these three main levels, 61.8, 78.6, and 100%. In this case, I can see my 100% isn't really relevant, so I'm gonna get rid of that so that my chart is clean. Okay, so let's get back to RSI. So I'm gonna highlight some areas where there are significant divergence points. So how you take note, you can use a vertical line to just see different areas and see whether the price make a higher high or lower low. So for example, over here. Okay, let me make this bigger. Okay. So we take a look over here between the two lines that I've highlighted, price actually made a lower low. But on our RSI chart, price made a higher low, if you can see here. So this is what we call a bullish divergence. And then after this point and the 27th September, we're expecting price to rise, which you can see it did rise, even on our price chart as well. Price went up and it continued going up. So that's how you look for bullish divergences. If we're looking at current price, I suppose over here would be the most recent one. Let me try and zoom in. So if you can see between these 2 points over here as well as here, price is pretty stable. It's on the same first support level. But if we take a look on our RSI, it's actually moving up. So it made a higher low. So we can expect price to continue to keep going up. So after doing this analysis, you can go in with Ichimoku or your MACD just to get more confluence. Okay, so you see my Ichimoku, price is moving above the cloud, which gives us a bullish signal. So it also gives us more confluence that price is heading in a bullish momentum. So let's try MACD as well. MACD is also moving in a ascending manner because of the green area, which signifies a bullish signal. RSI period value over here. We typically just stick to the same to the same settings. Okay, no worries. So I think I had another request for Euro USD. So that would be the last chart that we'll go through really quickly just to identify divergences. Okay, so same thing. Look at monthly first. You can see price has been dropping. Weekly, daily. Okay, on our daily chart, price seems to be moving in an upward trend. 4 hours as well as 1 hour. Okay, I think I will analyze on our 4-hour chart because that seems to be the clearest movement in price. So let's go ahead and get started. We're going to start by graphical analysis, see if I can get any trend channels or trend lines. We typically look out for trend channels more so than trend lines because then we can see whether price is going to continue to move within the trend channel or whether it is going to break out of it. Okay, so you can see here price is moving within a ascending trend channel. Let's go ahead and plot our support and resistance levels. Over here, I have an overlap support level since we have a swing high as well as a swing low here. On my Fibonacci retracement, I can see that price is the 38.2% lines up nicely with my first resistance here. Let me just label this. First support and first resistance. Okay. So this is just a very brief graphical analysis example, but I want to focus more on the RSI indicators. Okay, so same thing, I'm going to pull out my vertical line and see if we can find any divergences. Okay, I think we have one here. Okay, yes, but it is not very obvious. So here on our price chart here, it's a horizontal level. You can see the wick of the candlestick here. Right? So it's a horizontal level, whereas on our RSI chart, price is moving upwards. So price is making a higher low on our RSI, whereas on our price chart, it is staying in a support level, horizontal support level. So this is let me color it green because it's a bullish divergence. So we're expecting price to move upwards, which you can see that it did. Okay, we can see that on our RSI, we also have an ascending trend channel, whereas on our, let me pull this back. Yeah, so on our price chart, we have a support level instead, horizontal support level. Okay, let's see if we can find some more major examples of a divergence. Okay, over here we have one. Here price made a lower low, whereas on our RSI chart, it has made a higher low. So you can see price did indeed go up immediately after this point, immediately after the divergence. Over here as well. So they're pretty easy to look for once you get the hang of it. And they're quite common as well. So it's important to make use of different analysis techniques together with this in order to get the most accurate analysis. So here's another one that I've just highlighted. Price made a lower low, and on our RSI, price made a higher low. And you see price shot up immediately after that. Okay. I think you guys kind of get the hang of it. Let me just see if we have any questions. Okay, so let's maybe use stochastics as well, since they are often used in tandem. So you can see, even though they both make use of price movement, there can be some discrepancies between RSI as well as stochastics. So sometimes it's good to look at both. Here we see price moving in an ascending trend line. However, price broke out of this support level. So we could be looking at a breakout. And over here as well, just now we pointed out that on our RSI, price made a higher low. However, on our stochastic, price made a lower low. So what happens if you are in this situation where your stochastic as well as your RSI don't exactly line up? Well, we have so many other indicators here to use as well. Bollinger Bands, Fibonacci levels as well, MACD, all of that. So you can pull out any and just go accordingly. So see for yourself, price moving below. So it might be giving me a bearish signal. If we have a MACD, it might show us something different as well. So it's important to get used to and see which indicators you are most comfortable using and you are most reliant on, and just trust these indicators once you really know how to use them. Okay, so before I end this webinar, let me just show you guys. So we have, we have our VIP trading room. So all of the information is on IronFX.com. You get, depending on your account types, you can get access to different services. So let me just show you really quickly what the VIP trading room looks like. and the different functions that they have. Okay, so once you have registered, once you've logged on to the IronFX VIP trading room, you'll be welcomed by Desmond. And then over here in this channels column, you can see there's different sections for you to take a look at. We have the chit chat function where you can ask questions. You can ask questions about the fundamental analysis, about your potential setups as well. There are also training videos. And then we have news, so which would really help you for your fundamental analysis. So we have news every single day. And then we have the different currency charts. So here we have majors, commodities, and the different crosses as well. So it's basically like a mini trading view, but you get extra practice because you have all of the functions that TradingView has. You can change the time frame as well if you so wish. We have indicators as well. So how you create an analysis, you press create analysis, put out your analysis here. And once you have done so for example, if I say price is moving in a descending trend line, for example, let me mark it out. Oop. Okay, price is moving in a descending trend channel. Ooh. Okay, so here's the opacity. So it's highly customizable as well for your own charts. So you can indicate the directions, title, preferences. So if I'm gonna write descending trend channel, and I can highlight this, link object to text, and I just click on my parallel channel, confirm, and then I post to multiple channels. And in fact, after creating your analysis, you can tag Desmond or any one of our pro traders to ask them to check your analysis for you. So this is a really good way for you to practice your technical analysis as well. Okay. Okay, I think that's about all I have for you today. Let me stop sharing. Okay, let me know if you guys have any other questions. Thank you guys so much for coming today, and I hope you guys found this helpful. And I will see you guys maybe next week. Desmond should be back by next week though. So I'll see you guys whenever. Okay, thanks guys. Bye.